Nvidia remains the largest position that I have in my entire portfolio at over a 40% holding. That's twice as large as the next highest holding in my portfolio. But the reason why I remain bullish is I think this $5 trillion company is heading to $10 trillion in short order. And let me show you guys why. So first up, this is stemming on the news over the weekend that Trump and Xi had ended up signing a trade deal. Part of that trade deal is allowing US semiconductor manufacturers to sell into Chinese markets. Well, Jensen Huang is very excited about this, and his positioning with Trump is actually allowing this to potentially go through and him be a very large beneficiary of this deal. China is completely out of the forward forecast for Nvidia. So any future deals that we do have is just going to be bonus to what Wall Street is actually expecting. You can listen to Jensen Huang say the exact same thing.
At the moment, we are 100% out of China. And so China is 0% of, we went from 95% market share to 0%. And so I can't imagine any policymaker thinking that that's a good idea. That whatever policy we implemented caused America to lose one of the largest markets in the world to 0%. But anyhow, in all of our forecasts, if there are any shareholders out there, all of our forecasts, we're assuming zero for China. If anything happens in China, which I hope it will, it'll be a bonus. But it's a large market. China is the second largest computer market in the world. It is a vibrant ecosystem. I think it's a mistake for the United States to not participate.
And now, if we are potentially participating, like he said, that's completely a bonus, and Nvidia is in pole position to take over. If we end up looking at past quarters, you can see how much of an impact China's sales have had. Upwards of 20% of total revenue, or in recent quarters, somewhere between 15 to 12%. Now you can see in Q2, where you see July 2023, how it's fallen below 6. And now, from what he said for Q3, this is going to bottom all the way down to essentially 0%. That's not good for future growth, but that might be able to change for Q4. Anyway, regardless of that, Wall Street is still very positive on this company, even without China's sales. With the highest price targets on Nvidia coming in at $350 per share, and the average price coming in at 17% upside or $237 per share on Nvidia. Loop Capital just today rose their share price from $250 to $350, implying a 73% upside while keeping a buy rating. They said that Nvidia is leading a new golden wave of AI demand, but warned of risks from power limits, real estate, and regulation. He believes Nvidia will remain strong buys through Blackwell chip cycle, with 400 being a possible long-term target. That, my friends, is essentially a $10 trillion market cap. And the thing that I love about Jensen, by the way, is how well he plays the political game. Listen to him and how much Trump is going to want to support him based on the efforts that he's trying to make for America.
We can't afford to have the critical manufacturing of things that are technologies and products that are so important to national security be manufactured around the world and can't be manufactured here. And I think that argument is sound. It makes perfect sense. And we decided that we would go all in on bringing manufacturing back on shore. And so I think this is it's great for jobs. It's great for national security. It's great for supply chain resilience. It's great for our business. It's great for America. I think everybody wins. It's terrific.
There's a strengthening relationship between Donald Trump and Jensen Huang because he's saying everything that Donald Trump wants to hear. And I'm not just saying that he's just saying it. He's going to back it up with new jobs coming to America, those chips being designed in America. And it's just going to be a much better position to be whenever you're betting positively on a stock, is for them to not be fighting against the administration, but actually being best friends with them. Listen to this comment from today from Nvidia. From the transistor to the internet, every leap forward has shaped America's destiny. Now, a new industrial revolution begins, powered by AI and Nvidia accelerated computing. This is America's next Apollo moment. This is the age of AI. They're not just talking about AI being positive for humanity, specifically for America. This is very important. And now you see things like Trump trying to push out enhanced regulations, speeding up the process of allowing for new data centers, new export controls, all of these things to allow for Jensen to even speed up the rate at which they can sell their GPUs. It's all beneficial. This strong relationship is a much needed tailwind for a company the size of Nvidia. And like I said earlier, AI is growing at a 50% compounded annual growth rate. In order to have that happen, you need regulation on your side. So, as you can see, Jensen Huang here to address a 50% compounded annual growth rate, which was his assumption, he also said that we have reasonable forecasts from our largest customers next year, a very, very significant forecast, along with a bunch of other AI native startups that are looking to buy into their chips as well. But then in the most recent GTC in Washington, D.C., which, by the way, was selected as their place to be closest to the White House, so then Trump could attend. He didn't actually end up getting to attend anyways, but it was put there because of Trump and that relationship with the administration. Jensen Huang did say that he sees a $500 billion business in the next 6 quarters. Currently, Wall Street has that place for data center spend of around $380 billion. So to essentially suggest that it could be much higher than what consensus is seeing over the next 6 quarters could lead to some much better upside than what analysts are expecting. It's hard to imagine a company own a 75% market share in an industry that is growing at a 50+% compounded annual growth rate and not fall off from that growth. We'll have to see how they end up holding up that position and whether or not there are other businesses, because let's not forget about automotive and professional visualization and gaming and all of these other contributory revenue streams that also add to their total revenues. But overall, if they can continue to grow into 50, 60, 80 plus billion-dollar quarters, this is going to allow them to continuously expand. The limits on a business is not based on market cap. There's no cap that says a company cannot exceed $5 trillion. It's based on their ability to be a multiple of their overall earnings. So as long as margins are expanding, which they're expected to continuously expand throughout the year, and revenue continues to expand at a high clip, there's nothing really holding Nvidia back from getting to that $10 trillion market cap, as long as there's a market that continues to buy their chips. Now, I understand also if you don't want to just listen to just Nvidia and their projections of Nvidia and where they're going, but why don't we listen to their biggest competitor, Lisa Su from AMD, to see how big she thinks the market is and how much they can continue to grow.
Like, I've spent a lot of time in the technology business. I would say that we're probably on a massive 10-year cycle in terms of AI technology and AI build out, and we're probably 2 years into it. So we're still in the very early innings.
We're still in the early innings of a 10-year, 8 more years to go of AI infrastructure build out. That's got to tell you something, right? Currently, we're in the Blackwell Ultra phase, which is in the back half of the Blackwell phase. Then we're going to get into Vera Rubin and then eventually Vera Feynman to continuously make sure that they have a product cycle that can match what customers are looking for into those further years. That's only going to allow for better power efficiency, to tackle total cost of ownership, and limit what everyone is currently saying is the supply constraint right now is power. But if you are power constrained, then you need to focus on what is the most power efficient chip. Nvidia also leads here, so it actually allows customers paying top dollar for Nvidia chips to still save money based on total cost of ownership. They're in pole position, but it also looks like for very many years they are going to remain that way if this product cycle comes to fruition. And guys, this is going to be really quick. We have a lot more details to go over, but demand is worldwide. This is who's buying these chips. Google ended up seeing a 46% increase in their revenue backlog, up 82% year over year. This does not look linear. This is a complete breakout, by the way. Their cloud business accelerating growth back to 33.5%, up to $15 billion in the quarter. This was at one point a small percentage of their overall revenue, now scaling to a massive overall percentage of Google's business. Meta ended up signing with Google for additional compute. OpenAI taps Google for additional compute. OpenAI, by the way, not just signing with Google, signed a Stargate deal for $500 billion, $100 billion deal with Nvidia, $100 billion deal with AMD, signed with Amazon, Intel, TSMC, Microsoft, Oracle, Broadcom. They need essentially $1.5 trillion of compute. Listen to how crazy this is in an interview with Sam Altman.
How can a company with 13 billion in revenues make 1.4 trillion of spend commitments? You've heard the criticism,
First
Sam.
of all, we're doing well more revenue than that. Second of
Yeah.
all, Brad, if you want to sell your shares, I'll find you a buyer. Just enough. Like, people are. I think there's a lot of people who would love to buy OpenAI shares. I don't think you would want to sell,
Including myself. Including myself.
People who talk with a lot of like breathless concern about our compute stuff or whatever that would be thrilled to buy shares. So I think we could sell, your shares or anybody else's to some of the people who are making the most noise on Twitter, whatever, about this very quickly. we do plan for revenue to grow steeply. Revenue is growing steeply. We are taking a forward bet that it's going to continue to grow, and that not only will ChatGPT keep growing, but we will be able to become one of the important AI clouds, that our consumer device business will be a significant and important thing, that AI that can automate science will create huge value. So there are not many times that I want to be a public company, but one of the rare times it's appealing is when those people are writing these ridiculous OpenAI is about to go out of business and whatever. I would love to tell them they could just short the stock, and I would love to see them get burned on that. But we carefully plan. We understand where the technology go and how the products we can build around that and the revenue we can generate. We might screw it up. Like, this is the bet that we're making, and we're taking a risk along with that. A certain risk is if we don't have the compute, we will not be able to generate the revenue or make the models at this kind of scale.
Exactly. And let me just say one thing, Brad, as both a partner and an investor. There is not been a single business plan that I've seen from OpenAI that they're put in and not beaten it. So in some sense, this is the one place where, in terms of their growth and just even the business, it's been unbelievable execution, quite frankly. I mean, obviously, OpenAI, everyone talks about all the success in the usage and what have you. But even, I'd say, all up, the business execution has been just pretty unbelievable.
I mean, how reaffirming is that to some degree, right? That not only is OpenAI being extremely aggressive, and they're not even the only player, right? They also have to go up against Anthropic and Gemini and XAI and all of these other players that are also spending like crazy to try to win more market share in this LLM game. But also, OpenAI, as much as they've made so many forward bets, have not only gotten them right, they've beaten their own expectations. So maybe $1.4 trillion is potentially not enough. I know that sounds crazy. We'll have to see how it plays out. They could be wrong, but if they are right, this is such a massive market for the picks and shovels play, which is Nvidia, to continuously sell them that compute. And Nvidia wants to be part of this success. Like, they're not only supplying them with 10 gigawatts of Nvidia systems, but then they're also investing up to $100 billion worth of equity stake in OpenAI. So OpenAI's success as an Nvidia shareholder is something that you very much look forward to. If they do end up IPOing at $1 trillion, this will be a good paycheck for Nvidia as well. Not only this, though, like I said, the Oracle OpenAI $300 billion cloud deal, this is no linear chart. This is insane growth. Now the compounded annual growth rate looks like it's over 95%. This is insanity, going from $137.8 billion of RPO to $455 billion. That's on top of them signing a $20 billion deal with Meta. Meta's building their own systems as well. They have data centers, Prometheus, that's a 1 gigawatt data center. They're building over, multi-gigawatt data centers, Hyperion, which is essentially going to be the size of Manhattan, multiple Titan clusters as well. Let's listen to Mark Zuckerberg talk about how much he's willing to spend to make sure that they stay in the running.
I mean, didn't you just tell Trump you were going to spend like $600 billion? I mean,
I did, yeah, through 2028, which is
a lot of money.
It is. And if we end up misspending a couple of $100 billion, I think that is going to be very unfortunate, obviously. But what I'd say is I actually think the risk is higher on the other side. If you build too slowly, and then super intelligence is possible in 3 years, but you built it out assuming it would be there in 5 years, then you're just out of position on what I think is going to be the most important technology that enables the most new products and innovation and value creation in history. I don't want to be kind of cavalier about it. I mean, obviously these are very large amounts of money and we're trying to get it right. But I think the risk, at least for a company like Meta, is probably in not being aggressive enough rather than being somewhat too aggressive.
How crazy is that? Not being aggressive enough. This is putting the entire industry in a prisoner's dilemma. So if Mark Zuckerberg ends up saying that he needs to spend $600 billion, and by the way, if they overspend hundreds of billions of dollars, that's a Meta risk. That's not an Nvidia risk. A lot of that spend that they consider wasted would still be profit that goes to Nvidia. They don't care what they do with the chips after they've sold them, right? So that's the interesting thing. It's not just going to be Meta. It's not just going to be OpenAI. It's an entire race, and the risk is not falling behind, and so they all have to run to finish line. That's only going to benefit Jensen Huang's position here. Then no one ever talks about this very often. XAI continues to buy hundreds of thousands of chips of the GB200s, GB300s, 550,000 for Colossus 2. That's going to be step 2 of what's going to be even more, a Colossus 3 that's probably going to be over 1 million GPUs, right? That's only going to continuously stack as Elon Musk wants to stay in the race. Microsoft is seeing additional spend over and over. Not only is Azure climbing, Azure's growth is accelerating. So whenever they used to grow at 31%, this was insanity, right? This was very, very exciting growth. Now they're growing at nearly 40+%. So this means that not only are they growing, it's growing faster than ever. If this continues to accelerate, people are going to have to put even higher multiples on artificial intelligence companies and the amount that they expect for the overall amount of compute that's coming forward. It's a worldwide phenomenon as well. A lot of what we talked about has just been US spend. US approves Microsoft and Nvidia AI chips for UAE for the first time as part of an $8 billion expansion in data centers and cloud capacity in the United Arab Emirates. Amazon also seeing good growth in their RPOs. Amazon Web Services seeing the highest growth that they've seen in 12 quarters, right? We also just saw this morning, AWS and OpenAI announce a multi-year strategic partnership for another $38 billion of commitment, which was not included in this RPO. Specifically, Andy Jassy said that their RPO does not include announcements that they have not made yet, okay? So this is going to tack on another $38 billion, OpenAI and AWS. And then we have the neoclouds, which, as I'm going to go forward and look at capital expenditures increasing over time, these names are not even included, but yet, as you see, to deploy NVIDIA GB300s over the next 5 years. So they are still dealing with NVIDIA, but these are completely different names than the ones that people are used to looking at. IREN, Cipher Mining, Nebius, CoreWeave, all of these are additional buyers of NVIDIA chips almost exclusively. And if we take a look at capital expenditures, which over time has now reached $100 billion a year in purchase of property and equipment, this is just accelerating for NVIDIA, and they still remain the largest benefactor of all of this spend. Not only that, if we take a look at the amount of spend as a growing percentage, you can see almost all of these have increased over time. If we even look at Amazon, which is probably the most particular one here, actually just decreasing quarter over quarter, look at where this growth has gone from negative 24% up to nearly positive 55%. Meta is growing their capex at 128%, Oracle 270%. All of them are continuously spending more over time. So this is not just a numbers game going up, the percentage of change is going up as well. And by the way, if you like all the charts that we've looked at today, it was all powered by Fiscal AI. I mean, all of it. Unlike many of the data aggregators that you can find online that only end up sourcing the gap metrics here, Fiscal AI is actually using artificial intelligence to source and go through the press releases to find segment and KPIs data. So you're not just looking at total revenue, you can actually look at all the different segments of the business. You can then sort by, the overall growth rates of what advertising is doing or what potentially AWS is doing. And you can take a look at that. Very easy to change through everything that you're looking at to make it exactly what you want to understand the businesses that you're understanding, right? So whenever I said AWS was growing faster in the last 12 quarters, it makes it very easy to see that 20.28% has not been seen since December of 2022. That's very exciting. And this goes all the way through of checking all their remaining performance obligations, their balance sheet, their cash flows, all the multiples of how these companies are trading, so you can understand your stock positions or what you might be looking into next better than ever before. So right now you can get an exclusive 15% off using the code FiscalAI/future or the link in the description down below. Thank you so much, Fiscal AI, for sponsoring the video, but let's continue. Another thing that I love about NVIDIA is the scale at which they continuously beat their overall expectations on Wall Street. What investors need to pay attention to is that not only is NVIDIA setting expectations at a certain level, but that they keep coming in above that. It's not like Jensen Huang can come out and say, hey, we're going to make $500 billion over the next 6 quarters, and then them not follow through. What needs to happen is for him to say, we're going to get $500 billion in business over the next 6 quarters, and what we actually do is 550 or 600 billion. And so far throughout history, that's exactly what they've done. It's in my belief that Nvidia is going to get to a $10 trillion market cap in the next 3 years. I'm very hopeful this is going to happen. I'll monitor it on a day-to-day basis, but right now it looks like full steam ahead on the AI train. That's why it continues to be my #1 position in my portfolio. Well, ladies and gentlemen, thank you all so much for watching. Really do appreciate your time, but bye for now.